Good morning, everyone. Welcome to our hybrid event, which is the eruption of collaboration in Fintech inspires mobile network operators. I am Karishma Siudat, leading the ICT sector at the Israeli Trade Mission to South Africa, and I will be your host for today. Today's event will be hybrid. As you can see, our Israeli companies will be part of the panel discussion, joining us virtually. I will now have Nava Getahon, who is our newly appointed head of Israel Trade Mission South Africa, to introduce herself, and then we will kickstart with today's event. Nava.
Hi, everyone. Good morning. Thank you for joining us today. My name is Nava Getaon Fissa, and I'm the head of Israel's Economic and Trade Mission to South Africa, and I'm very excited to be here with you today. The Israel Economic and Trade Mission to South Africa is part of the Israeli Ministry of Economy and Industry, and our main objective is to promote, enhance, and facilitate trade, investment, and economic ties, basically, between Israel and South Africa. I arrived South Africa 3 months ago, fresh and new. And since then, I have been inspired by the potential this country holds with more fiber and wireless deployments in South Africa, a growing number of connected devices and businesses and enterprises who are asking to transform into digital connections. I must acknowledge that telecom industry is an essential driver of innovation to this country. Today's event is designed to explore how telecom operators in South Africa can achieve greater success by implementing innovative fintech solutions and improving their solutions. We have invited 3 Israeli companies to present their cutting-edge solutions, and together with Ms. Apiwe Delmini's extensive experience and insights, I'm sure today's event will leave you with a sense of inspiration. I would like to take this opportunity to thank NetUp, Peritix, and Motivate for joining us today from Israel. To Ms. Apiwe Delminis, who was happy to cooperate with us from the very first beginning. And to our partners in the Israeli Export Institute, and finally, to my team at the Economic and Trade Mission, who worked tirelessly organizing this event. We hope that you will enjoy the event today and find the content useful and informative. Thank you all.
Fintech innovations in the form of mobile wallets, mobile money, and digital payments have become an innovative and essential service globally. And we are seeing an increase in the SA market with telcos and the banks working together to make this successful and convenient for users in South Africa. With this said, I would like to hand over this panel session to our moderator, Apiwe. Apiwe's background is a qualified industrial engineer who spent majority of her career building innovative businesses for large corporates, most recently in the digital and fintech space. She is the MD for Blue Pentagon Consulting, former telco executive head in financial services and digital commerce. Apiwe.
Good morning, everyone. Thanks for joining us today. And thanks for the honor to the Trade Mission for me to be part of this event. Good morning also to our panelists that we'll introduce shortly. We'd just like to start with just a brief overview of the fintech landscape as we see it, both globally and in Africa. And then we'll move along to the panel discussion that we'll have shortly. So fintech players, they're delivering many exciting and innovative changes in the financial services landscape. And in doing so, they're disintermediating, your traditional players. Although financial intermediaries, commercial banks, investment banks, mutual funds, obviously still play a very big role internationally in the financial services landscape and deliver a lot of value to enterprises, to investors, to consumers, they are being usurped by these valuable startups. And we're seeing that is more and more the case in the African continent as well, where a lot of the opportunity still lies. If we look at electronic payment systems and how they've converted mobile phones into convenient interfaces with the financial services sector, they're also now trusted by billions of people across the world. In developing countries, the delivery mechanisms include things like, agent distribution networks, communication services over mobile, and enhance thereby the compatibility of the various applications, the technology, and this allows really the average African person to perform seamless transactions, maybe even more easily than they would traditionally with cash, which is still quite a big part of the South African ecosystem and Africa. So digital payment technology has contributed to growing financial inclusion and changing society for everyday people. Now, if we focus then on telcos, telco revenues have stagnated, competition is extremely rife, and there's a lot of market saturation in that industry. So there's a highly critical nexus between the financial services needs and the needs for internet access that Africans have. And this is what creates a tremendous opportunity for telcos, which they have been taking advantage of, but there's still a lot more that can be done to use their capabilities to ignite accelerated growth. And this is really why we're here today, because there's telcos, there's the financial services institutions, the banks, but there's a lot of collaboration and convergence between players and across industries, one of the biggest trends that we're seeing globally in fintech, not just in Africa. Another highly valuable asset that creates a key advantage for these MNOs is obviously they have an extensive customer base. And with that, and the technology that they have differentiated data and insights about these customers, and they have expansive distribution networks that they can leverage to grow and accelerate fintech solutions. So if we think about mobile tech advances and how they've allowed mobile money on smartphones and these applications to provide a wide range of goods and services, mobile banking, person-to-person transfer, all of these are being incorporated into the financial structure, so much so that in 2021, it was actually the highest record year for global fintech funding, with 168% year-on-year increase. This is globally, the sum of about 132 billion rand in funding just into fintech startups worldwide. That 132 billion rand in funding is 1 out of every $5 in total capital venture funding. So it's a very fast-growing sector. A lot of interest and a lot of the growth in the fintech space we're seeing is now focused on the African continent, and the capabilities that are required will require the institutions, traditional telcos, startups alike, to collaborate more effectively with to get technology from wherever they can across the globe. The interesting thing is, and I'm sure this is a known stat, that mobile money dominates fintech investment in Africa, and the population will continue to use the region's rising cellular penetration, rising internet penetration, to adapt to digital banking, digital lending services, insurance, and the like. Africa is already the largest adopter of mobile transfer services. It's about half the world's mobile transfer systems, and the globe's registered mobile money customers are about 46% in Africa, with about 2/3 of the volume of transactions worldwide happening in Africa. However, despite this success, there's still lingering lack of internet penetration, access to the internet, and access to cellular services, particularly in rural Africa. And this is the reason we have every reason to believe that there's still significant growth opportunity in the foreseeable future. So while the focus of the fintech solutions and mobile money services have been concentrated on digital, like we said, it's expanding now, and the convergence that you're seeing with different sectors now wanting to have some sort of play in the financial services space. You'll see expansion, growing fintech solutions into e-commerce. What you have in e-commerce is a lot of embedded financial services solutions, and I think that's where a lot of the convenience is also going to come from for South Africans and the rest of the continent. And the new areas, they're competing for creating value, creating convenience and simplicity and experience. And a lot of this has to be unlocked through the partnerships with hyperscalers from all corners of the earth. So if we think about the differentiated insights that telcos have, and you think about the banking industry, the trust and the brand of the banking institutions from a security perspective and all of that, there's a lot of untapped potential, particularly, as I say, from a collaboration standpoint. And I think, with Israel's withheld and demonstrated moniker as the world's startup nation, there's a lot of reason why we can see more and more economic development in the fintech space by collaborating. I think in Israel, there are over 750 fintech startups, which is the highest in one country, more than any other place in the world. So we'd like to be able to call out stats like that for South Africa. So without further ado, I would like now to take the opportunity to allow each of the panel members to introduce themselves before we get into the panel discussions and questions. Yaron, would you like to go first?
Hi, sure. Nice to meet you all. Thank you for having us in the panel. Hope that you hear me well. I'm Yaron. I'm the CTO and co-founder of Motivate here in Tel Aviv. We are specializing in understanding the end users. Thank you.
Thanks, Yaron. Ran?
Hi, good morning, everyone. Pleasure to be here. Thanks again for inviting us. Apologies for my voice, a bit croaky this morning with a bit of a cold, but I hope you hear me okay. My name is Ran Tripman. I'm the sales director for Paretics. We're a credit decisioning, credit analytics solution company. So we help lenders make better and faster decisions, credit decisions for lending. And pleasure to be here and looking forward to the panel.
Thank you so much, Ran. Chen?
Hi, good morning, everyone. I also have a croaky voice. I'm sorry for that. Chen Rosen from NetOp Cloud. We are dealing with network automation using AI and smart tools in order to make sure that the network capabilities of telcos and fintech company are working well and without any human intervention.
Thank you so much. Thank you to all three of you for joining us. I'll get right into the questions. My first question is to you, Chen. So one of the biggest ways that fintech innovators are creating enterprise value and maybe more importantly, customer value in the financial services space is through converging capabilities and creating ecosystems, as I mentioned, and embedding their services across these various boundaries. What do you think are some of the complex challenges that these companies are facing to drive this convergence with partners, with vendors, with multiple institutions? And in your view, how's technology making it easier to enable convergence?
Yeah, I think that especially when we're dealing with telco companies and financial institutions, the biggest challenge that we're facing is actually to be able to transform these companies because of the legacy and the fact that these companies are profitable for a long time, and have the way that they used to operate, and now you come with a new technology and start to change and actually change the way the companies operate. I think that it's a huge challenge for startups and small companies to try and drive this change. And the best way to tackle it is by leading. If you look at the telco and financial institution, you expect the leadership there to take the challenge and lead it and lead for the change, because otherwise, you know, the vendors can't do it by themselves. And in any organization that I had the opportunity to be part of this transformation and creating the ecosystem, you can tell that really in few days that the leadership in these companies, and when I'm saying leadership, I mean the C-levels and sometimes even the chairman of the board are leading the change. And these kind of things really help to grow the ecosystem, and definitely can support the startups that developing the solutions for these companies. No doubt that the companies, you know, from the other end, have also to make sure that they provide the right support, the tools, and making sure that they can deliver to provide confidence for the decision makers that they took the right decision.
If you'll allow me to just ask a follow-up on that. I mean, I hear you're talking about, you know, the challenge and the barriers that you get with massive amounts of technical debt and legacy systems that these companies obviously have to consider. And there will always be some sort of constraints in terms of the capital investment, you know, to build these new systems and migrate technology. Do you think that then creates an opportunity, or do you think it makes it easier to kind of ring fence a small area to start with, or to kind of you know, house a certain space where you're going to innovate, and maybe that's the area that you partner with external startups and companies with the tech that they have as a way to then build from the inside out?
I just make sure that I understand what you asked, because the line is not so good here. If you're talking about innovation centers or acceleration centers as part of this corporates, that's what you're asking about? Yeah, so I think that, you know, I dealt with innovation centers and accelerators and so forth in many aspects in my professional life, and you always come to the conclusion that it's depend on how much leadership the leadership of the organization is supporting them, because in the end of the day, they need to have budgets. They need to have the attention of the management, and otherwise it's not going to work. And I can tell you that, you know, 20 years ago, 25 years ago, I believe that the people here are familiar with that situation. Most of the companies didn't have CTOs. They have IT managers or something like that, and once they nominated CTOs for the leadership roles as part of the management, you can tell that there become a huge difference. They got budgets, they got attention. Part of the strategy of the company was based on them. And it's the same with the innovation centers. If they won't get the support of the C-levels, and even on the top of it, it's not going to work. So these guys have to get full support and to be part of the main strategy of this organization. Otherwise, it's really hard to count on them.
No, fully agree. That makes sense. I mean, I think you see a lot of failures because an accelerator or an innovation team is not necessarily getting the right levels of support across the business. And it takes senior leadership to enable that, because a lot of the time, the value and the capabilities actually come from the rest of the business.
Spot on. Yeah.
Okay. Ran, I have a question for you. So if then technology is a core enabler for transformation, and if particularly internet penetration on the demand side, you know, mobile services on the demand side are enablers, and then on the supply side, it's infrastructure and capability. In your view, how significant is access to customer data and customer insights to succeeding when you consider the fact that that is a big asset that telcos will typically have, to transform and to create services that truly meet the customer need?
Yeah, I think that's actually absolutely a huge game changer in my mind. When you think about when you look at the traditional financial institutions, one of the challenges they had, especially with unbanked and underbanked customers, is lack of data to make credit decisions. By using the vast, you mentioned the vast amount of mobile data, or the data that the MNOs have, is really crucial for this. They have a lot of insights, both in terms of the mobile wallet usage, as well as the behavior of the customer, locations. There's a lot of data there that can be used for credit decisions, and in these times where we're using AI, machine learning, statistical data to make those credit decisions, the more data we have, and there's a lot of these relevant data, that can be a real game changer. Especially when we're looking at micropayments or microloans, where the alternative of having someone come into a branch and have an interview and so on to get a loan is really not viable. Being able to do that in conjunction with a mobile wallet or a mobile app digitally, instantly, is really something that can now offer microloans to a big population that wasn't able to get those loans before.
And do you feel that, it's one thing to have the data and the insights and to have a lot of experience utilizing that for traditional mobile services, but I think it's another thing to start to use that data to develop alternative scoring models, bring in the machine learning and all of that. So do you see that as an area where there's a lot of room for maybe the traditional financial institutions to bring in their capabilities for better outcome there?
Yes, absolutely. I think that's where you mentioned collaboration is key here, because I think there's two pieces of the puzzle, right? We have, on one hand, we have financial institutions which have obviously considered credible. They're positioned well from the customer's perspective to provide these facilities. They have all the capabilities, the know-how, their experience in that. On the other hand, and they have some of the data. On the other hand, you have the mobile operators with a lot of data, but also maybe mechanisms like the mobile wallet that they can operate with. So a collaboration between the two is perfect from that perspective. Obviously, you need the right technology to be able to understand what to do with the data, because as you say, you have a lot of data, but how to use that for scoring, how to score those applicants with that data is crucial.
Okay, so then if we stay on that point, what do you think are some of the best practices or the innovative methods to then use that data, the analytics, the insights to develop, the right use cases? I think what we've seen in the African market, you typically see either leapfrogging of use cases from other places in the world, which I think is great, but you also see, solutions or use cases that are implemented that don't necessarily talk to the customer here. So how do you make sure that you use the data in a way that the use cases you develop out of it is acutely linked to what that customer need actually is?
Yeah, obviously there are, as you say, there's various scenarios here, right? And we've seen several of them, whether it's led by the financial institution where they're providing it and piggybacking on the MNO data and so on, whether it's the actual MNO providing it with the backing of the financial institution, or it's something in between, right? And I think it depends on, at the end of the day, it's where it's going to be more convenient also for the customer, for the consumer, the scenario. So I don't know whether you mentioned it, but obviously the buy now, pay later is is clearly linked to when the customer is buying something in that journey, and
Yes.
then using a mobile wallet is probably more natural to do that, to transact that, to convenient for the customer to actually make that happen. So it really depends, I guess, on the circumstance, on the scenario. You need to figure out where you're meeting the customer, and maybe there's different entry points. I think one of the challenges we've seen is because there's two parties here that need to collaborate, and maybe there's a bit of reluctance to share data between each other. You need to find a technical solution that kind of sits in the middle and then uses both data but doesn't expose the data of each other to the other party, if you understand what I mean.
100%. I mean, I think one of the biggest aspects of that data conundrum, particularly in South Africa, is, with the Protection of Personal Information Act has also made it slightly more complex, where you see even within the same maybe group of companies, there are some challenges around how data can be shared, how data can be utilized. So I think it's a very relevant and pertinent issue. That enterprises will want to protect their data, but also will have to make sure that they're complying, within the laws. Okay. Maybe Yaron, if we move on to you and kind of sticking on this case of a little bit about the use cases with what your company does and the experience that you have, it would be interesting to just hear where you feel like there's still opportunity to collaborate when it comes to developing the right use cases and creating these solutions in the African market.
Yeah, especially when we are talking about an environment of many thin file the customer, meaning not sufficient data to receive all services from a formal institute. So there is a need to better understand the customer in order to have a better communication with the customer. And enriching with other alternative insight, enriching the financial data. So this is where motivate harness the power of AI and traditional psychology in a way that the financial institute can understand and better communicate with those thin file the customer, where there is no data, they are completely unbanked, but still they're using their mobile device, and we are able to have this new layer of data and dimension to those institutes in order to bring them the right use case and the right service.
Would you like to expand on maybe an example just to make it clearer?
Yeah, suppose that we would like to offer a credit card or understand the user in the specific journey that is doing. So we are able to give other insights based on psychology and AI to the financial institute in order for them to communicate or take a better decision, even without any historical finance data.
I think the point you touch on there, because I don't think it's always about necessarily, alternative credit data or a scoring element, in terms of insights from the data that you can get. I think a big part of it is understanding a unique consumer and the challenges that they have, and creating an experience and a journey that actually talks to them. So that talks to the next question, which is, we know a lot of African consumers, they're yet to adopt digital financial services. You have a lot of emerging digital consumers, and many of them struggle with technology. There are challenges with financial literacy. And so it's really important to make sure that the experience as well, you're creating a lot of simplicity, speed, and convenience. And what that looks like maybe in a developed economy versus what it looks like, in rural Eastern Cape might be very different. So what do you think are some of the challenges that providers face in creating the right experience for that cohort of customers? And how can they actually enhance that, not just in terms of adopting the solution or from an acquisition perspective, but throughout the customer life cycle, especially if you compare the way that people would, open or use a bank account maybe 20 years ago in the traditional sense, but now having technology at your fingertips?
Well, even 10 years ago, where we will approaching the bank, and he was the one that decided on spot based on financial history. And now we are talking about meeting the customer digitally without any history. So we have an excellent customer with lack of collateral or previous financial history, and we need to bring them or to feed them the right use case or product. So it's a win-win for all parties. We can do it super fast without affecting the user journey even in the process, just tapping in and understanding based on those new insights how to approach, how to build the right or implement the right product with the customer. So it's more on understanding, integrating AI, which keep on learning and getting better, and doing it in scale. So this is the way that we are see it here, utilizing our solution with our customers. And again, it's not only scoring or financial, we are talking about even retention and reducing churn in a minimal cost.
And if we think about a market like South Africa, maybe even Nigeria and Kenya, you still have a lot of kind of entry-level smartphones that may not have the most sophisticated capability. Where you do have that, there's probably a lot more data you can collect and a lot more analysis that can be done. But where you don't have that, what are some of the ways that then these enterprises can get around the entry-level smartphone and the barriers that brings? It's very easy in the States with predominantly Apple smartphones, the latest tech, but these markets are Android markets, very entry-level devices that get handed down to the next person, You find that the person who's getting the second hand or the hand-me-down Android phone is actually the person that you're trying to target from an inclusion perspective. How can you address that?
Actually, we are see the penetration of those smartphones, and we are supporting the basic versions of them, and we are depending on user data that generated by the user itself, and not any third parties in the process.
Okay.
So the way that a normal user generates is personal data, and we tap in and look at it at this data or metadata. It's give us enough insights or data to generate those insights and transfer it to use cases and to real important action item for our customers. So we are already doing it in emerging or other location globally.
Okay. Maybe just, I think this is really interesting, just a follow-up question on that as well. I know that what your company specializes in is finding alternative ways as well to understand the behaviors. I don't know if you want to go into that a little bit.
Yeah, we are as I mentioned, we are kind of doing a fusion between traditional psychology and AI, and we are currently in the financial vertical, but we are approaching other verticals as well, and we are not using only the data or metadata from the mobile devices. We are using other channels, even from the financial institute. We are using those data to merge and to build the solution and use special use cases for the businesses. So given the fact that we are building our platform based on psychology and AI, give us a wide range of tools and solutions for our customers. That's why we're saying that we are not dealing only with credit scoring, which we are able. We are supplying. We are dealing with retention, keeping the churn, even building a specific communication based in a customer level. So this is the ability of the platform. And it's really something that we are dealing with new data channels to support various use cases in the platform.
Okay, wonderful. Chen, I'm going to come back to you right now. Just looking within the enterprise itself, we've spoken a little bit about some of the barriers, and you started off there from a capital investment perspective. But now, if we look at one of the reasons that newer startups have been able to create disruption in the space is just because of how nimble they can be and how they work extremely differently. I'd like you to weigh in on, some of the internal barriers that you feel that maybe the larger institutions or the more traditional players struggle with internally that makes them either take longer to enter the market or create certain delays, or just actually makes them less competitive when you compare them to some of the other newer, more innovative players who maybe don't have issues like technical debt to deal with?
Yeah, so I think that I will have to allude to what I said before and then to explain it. So first of all is about leadership and strategy. If the strategy is not aligned with the practical day-to-day that these companies are experiencing, it's not going to work, because you have to make sure that you put the right direction for everybody to understand that part of the digital transformation is a key for the company success and even for in the future for surviveness. So this is number one. Number two, I think that in most of the organization that I met and in this size and with this industry, most of it was in Australia. The key thing was that the business had to have full alignment with the technology, and even more of that, the business have to get the leadership position, meaning that the business have to be able to decide which solution he wants to adopt in order to improve his financial results as part of the financial result of the company. He should have the last decision about the vendors and the budget. And even if you take it to the extreme, he should have the opportunity to acquire or purchase other solutions that come out, out of the company itself. So not internal, but external. I know that it sounds like a bit extreme, but I think that most of the organization won't do it. Like most of the business won't take a decision to take external services or external vendors if they have the solution in-house. But the fact that they have this opportunity and everybody knows that they can choose something else will make sure that the other department in the organization will support them in the end of the day. And one of the, I think one of the successful projects that I'm familiar with was exactly in that strategy. So the business led, and that's what drove everybody for a successful project. And in Etop, I think that this is part of the way that we try to do business with our customers and making sure that they have aligned strategy and everybody understands what's on the table, but we're supporting the business in taking the right decision to make sure that in the end of the day, the business results will improve with our solution.
Yeah, I mean, I hear you as you're talking. I'm thinking, of some of the reasons that have been stated why, traditional banks perhaps have been left behind. And one of them being, the decision to build everything in-house. I think there's a lot of banks that even today will still try and build their own technical systems and solutions in-house instead of maybe partnering. Obviously, there are benefits of speed. What do you think are some of the other benefits, aside from the fact that you get technology and capability that you necessarily don't have, and you have the skills, you don't necessarily have the skills. What do you think are some of the other benefits if we're thinking now of maybe the banking institutions and other financial services institutions that they will benefit from if they have a more open mindset and approach to getting technology externally?
I think it, first of all, it will give them out of the box thinking, because, especially startups are specialized in out of the box of thinking. And in the end of the day, financial institutions are a beast. They're very big companies with a differentiate culture, and once you bring somebody from outside, it can definitely contribute to the way of thinking, behaving, and drive a change. In the end of the day, you don't want to make a change that will put the financial institution in a position that he can lose money, but definitely to be able to hear different thoughts and minds can contribute. And in this space, in the end of the day, as you mentioned, to develop a solution in-house, it's most of the time will be much more expensive, will take longer, and the path for success is not confirmed. And once you take a solution from companies that not as part of the organizations, you can tackle all of these challenges much easier.
Sure. Yeah, I'm just thinking now, it's one thing, entering a new market, in your current geographic space. But I think what a lot of the South African based telcos who have a presence in some of the other countries, but maybe different levels of success in terms of different use cases, particularly in fintech. Obviously, telco is a highly regulated space, and financial services tends to be highly regulated, particularly in South Africa. What are some of the barriers to overcome from that perspective? And I'm keen to hear, your views, any of you. Rand, would you like to take it?
Yes, sorry. Yes, I guess as you say, I think first of all, I agree with what you said and what Chen said about taking outside, kind of using technology or partners from the outside instead of building it yourself. In terms of especially in the space of lending or micro lending, which is definitely obviously it's not the expertise of an MNO. It's even banks are not traditionally, they're used to lending, but micro lending is something slightly different. So being able to understand how to do that, how to do it efficiently and fast is something that you need to look at doing it. I think partnering with someone that has that solution, has that technology, has that know-how is going to be very, very powerful. But at the same time, as you say, there's regulatory requirements, and I think again being able to that's another advantage. I think that a lot of the technology companies are facing these or working with these institutions in different regions are used to all of these regulatory requirements and how to overcome them. So I think being able to partner with someone that understands that, may be different from region to region, the exact requirements, but the technology is ultimately built to deal with that. And as you mentioned, I think in our space about the issues of data privacy with collaboration, I think obviously a technology like ours, which can take data from both sides, but not share the data, but then produce a credit offer recommendation, credit score, and analytics around that without exposing the data to each side is very strong and very powerful. And we've seen that work in practice in various cases, either working with a bank to do that or from the side of the MNO. So definitely we've seen that work in real life in practice and being able to produce that for certain markets.
I mean, you mentioned the point of entities, maybe like your company, that have seen and operated in different markets, and so then have understood like different markets and the different regulatory structures. You could have a decision maker, say in a South African entity, that says, well, I need someone who understands my regulatory landscape better. What do you think are some of the trade-offs with partnering with someone locally in your market who has dealt with your regulator versus dealing with someone who has a perspective of various different kinds of markets?
Oh, you're right. I think that at the end of the day, we definitely need to, I think there's advantages of someone that's looked at other markets. It's not only fixed on your market, can bring different ideas, but at the same time, you do need to collaborate with someone that understands the regulatory requirements in your market. So trying to understand, I think that's why we typically would partner with a local, local entity, local vendor that understands the regulatory requirements in that market. So you get the best of both worlds, where you have a technology company that understands a wider perspective, but at the same time, someone that understands, that can bridge that gap and understands the regulatory requirements specifically in South Africa, for example. So I think definitely we need to collaborate ourselves as well with expertise in that area that understand the regulatory requirements in each country. And that's what we're doing. Typically, we'll have a partnership with a vendor, with a technology company, or someone that understands the market in each region. So we're making sure we can provide the right solution.
Okay, and then maybe just as another follow-up to that, I'm interested to find out, do you feel that, so obviously in a lot of these new use cases in the fintech world, the regulator is still catching up in a lot of the markets. Do you feel there is a bigger benefit, or it makes it easier if there is a really well-established regulatory framework within, a certain sector of financial services when you're trying to develop a solution? Or is it easier actually when it's underdeveloped and you can work with the regulator and partner with them, and convince them of how you want to innovate and why that's the best approach?
Ooh, that's a tough question. I think that obviously there's advantages and disadvantages for each scenario, right? I think that and it depends on the regulator, right? I think that working with a regulator is good, but it's a long process, right? I think that could really take a long time to get to that point. On the other hand, for a long game, right? For the long game perspective, obviously it's good, because then you can have influence on what the regulator is doing. On the other hand, if you're working in from a short-term perspective, I think that working in a undeveloped or a segment that isn't currently regulated and less developed, then you can operate probably faster in terms of what you're doing. But ultimately, you get to that point where the regulator will step in, and then you'll have to adopt. We're seeing that. I mean, I was at a conference earlier this year in London about buy now, pay later, where obviously that's an area that in the UK isn't currently regulated, but the regulator is starting to step in, and that's going to have an impact on how things move. So yeah, definitely think advantages and disadvantages to each one. But I think ultimately, and from a long-term goal, yeah, if you can work with a regulator, and I think regulators need to work with also a lot of technology companies to understand where
Yeah.
things are going to develop their policies accordingly.
Okay, cool. Thank you. Thank you for that. I guess, I mean, we've discussed a lot of different aspects. We're trying to obviously unpack some of the reasons and the benefits in collaborating across these various industry boundaries. But there are some really specific things, you can't do everything. You can try and optimize everything. There will always be trade-offs. There will always be decisions that are constrained by capital, that are constrained by resources, and that's both on the financial services side, or financial institutions. It's also on the telco side, especially on the telco side, if you're considering that you're still having, you still have a large core business that is a separate business that you're managing, and you find that a lot of telcos struggle with balancing the growth ambitions in adjacent or new services like fintech in their world, and balancing it with the needs of driving the core business, investing in network infrastructure and maintaining the current business. So there's a lot that you need to get right, but I'd like to get each of your perspectives on just 2 or 3 key ingredients in your view of how whether it's a financial services institution, whether it's a mobile network operator, some of the key things that need to be in place if you're going to be able to build a fintech business that scales, that is sustainable. Yaron, would you like to start?
Actually, I was thinking about the answer. I think that looking at the telco from our experience, given the fact that we are using the mobile devices, and we really know how precious is the data that the telco and the infrastructure of the telco have within their position. So it's almost something that need to tap in from their perspective, partnering with financial institute and closing this kind of gap between those industries. We were examining those kind of solution between those industries, and we know that they're win-win regarding the way that one communicate with the end user, and the other one is holding his customer. If they're working together, how big their benefit can be, because the data flow between those industries. So that's what I was thinking about. I want to add regarding the other questions that you said about that you answered here about operating within those financial institutes. From our experience, once you enter a bank and sit with the teams, and we meet a lot of departments within the bank, the innovation that are raised from those meetings and the product use cases that generated sitting together is something that really worthwhile and really push the business of the fintech and the financial institute together. This is something that I want to mention before.
Okay, thank you. Thank you for that. Chen, would you like to go next?
Yes, sure. So first of all, I think it's a very big challenge, but I think it's the right thing to do, the first step in the right direction. And this is something that also related to what we're doing in our company, because in the end of the day, financial services today is really depending on the quality of the network of this organization, because transaction is made in milliseconds, and it's definitely can influence even the financial results of some financial institutions. So we actually, I'm familiar with that with one of the banks that we're working with. That's really keen to make sure that the infrastructure that he based his financial services, and I'm talking about the network infrastructure, is working well in high quality, and he can make sure that he's not losing any money because of this kind of challenges. And now when you think about telcos, they're doing the same. You actually, I don't want to say can be sure, but should be in a position that you at least, you can tackle this point and make sure that the infrastructure that have to provide the support for these financial services is working well in a high quality. So this is number one, to making sure that the infrastructure in the telco company is in the right level that can support the business. Number two, from my experience with the telco companies in the world, I think that every time that those companies are separating the activity from taking the infrastructure for one side and then the other businesses, and even separated to subsidiaries, it's something that in the end of the day helping them to grow, because it's give focus to each one of them. It's even create some business dependency between them. So in the end of the day, the business, in this case the financial services, can buy the infrastructure from for somebody else, and this is definitely push the infrastructure company to make sure that they provide high quality network and so on and so forth. So I think that's the one of the ways to make sure that they can be successful, and to nominate also the right leaders to lead this financial activities, because in the end of the day they have to understand more in financial than in infrastructure.
Yeah, I mean, I think it's very interesting what you're saying, because just reflecting on the typical telco customer journey. First of all, you don't necessarily recharge every single day, although I'm sure there are customers who might recharge in small increments on a daily basis, but typically, you'll recharge a certain amount, and you won't necessarily be performing those transactions on a daily basis. And over and above that, some of those transactions can actually be conducted on different platforms, and you still have even the most sophisticated or affluent customers doing those transactions using just USSD technology. And so I think when you now think of payments and you're talking about the network infrastructure stability issues, these are some of the things that deter customers, because now, it's a payment that I'm making or I'm receiving. It's my hard-earned money. And it may be more frequently that I'm performing these transactions. You don't really have a lot of leeway with customers to have a service that's not going to perform optimally each and every time. They want it to be quick. They want it to be simple. And so just in comparing the typical telco customer journey and the different distribution channels that you have versus now moving into a fintech solution, particularly where there's payments involved and there's a wallet with my money in it, I think customers will be less forgiving and a little bit more anxious to see a seamless, quick, and secure journey and have that kind of experience. Yeah,
absolutely. And it's a big challenge that NetOp is lucky to face it in the bank, in the financial industry, but They can always say, especially the technologies guys from these corporates, that it's the ISP or the telco company that's their fault in something that happened in the low quality of the network and so on. But now when the telco company is taking responsibility on that and wants to sell it as part of their offering, they have to, to be in charge of that and make sure that it's working well.
Yeah, definitely. Ran, over to you just for your thoughts on, the 2 or 3 things that are really key to build successful solutions and scale them.
Mm-hmm. Yeah, so I think the first one, I think this is, we've talked about this throughout the session, is collaboration, is really not trying to do everything yourself. So I think really collaborating, if you're a telco, collaborating with a financial institution, I think is key, and being open to doing that, and being able to, and collaborating or partnering with other technology companies, where it's whether it's someone like us or someone else, but essentially being able to bring in expertise from the outside, because I think that this is definitely an area that they're not experts in. And yeah, you can probably bring hire people and so on, but I think that I think bringing an external partner is key for that, because ultimately you want to create, first of all, I think creating a seamless process is really important for the customer, right? Being able to do everything that from their perspective it's all seamless, and they don't have to go through lots of different hoops. So thinking about that, but the other side of it is also, especially around credit decisioning, is being able to be transparent. So being able to understand why, for example, someone would be declined, why someone would be approved, having a transparent model that everyone understands and everyone on board understands why things are happening, I think is also very important for the long run, both internally but also in terms of your communication with your customers. So I think setting up, collaborating with the banks for their know-how, their trust, all the different things around that, collaborating with a technology company that understands for decisioning micro loans specifically, which is different than perhaps other types of lending opportunities. And as the third thing is thinking about the seamless, the seamless process and transparency around decisioning, I think is important.
Wonderful, thank you. Thank you so much. I'd like to thank our panel. That is the end of my questions at this point in time. I think I've learned a lot that was very insightful for me. At this point, we would like to invite the audience. If you have questions that you'd like to pose to any of the panel members, this is the opportunity to do so.
Good morning, gentlemen, and everybody in the room. Am I audible? Can they hear me? Okay, thank you very much. Thank you so much for your insightful inputs in terms of the whole digital transformation and the banking ecosystem. What I want to ask is that with regard to transforming banking systems, I'm part of Banking Transformation Africa. And last week, we hosted a whole lot of banking execs from across the continent, including some telcos, in terms of how we're going to drive the whole digital transformation in the banking sector, and also including telcos. So what I want to ask is that with the technologies that you have, how do you then have integrating the whole ecosystem, telcos as well as banks, particularly knowing that banks are very regulated. But then at the end of the day, we've got fintech and startups that are driving innovation. From your organization point of view, how then do you work on building a combined ecosystem taking into cognizance that banks are regulated, but then also everything is driven by innovation. And particularly on the continent of Africa, we're looking for financial inclusion for the people in the most remote areas, of which the telcos are helping us reach. So I would just like your input, because it's a whole ecosystem from two different worlds. And how then do we amalgamate both to make sure that we drive digital transformation as well as inclusion, financial inclusion for those in the most rural parts of the continent? Thank you.
Do we have any volunteer for the question? Else I will voluntold somebody.
I can give it a go to start
Thanks,
off.
Ran.
Have the others think about it in the meantime. Yeah, I mean, our experience has been we've as I said, we've worked in different models where one of the ones we've had in Africa was led by an MFI, a microfinancing institution, where that's exactly their goal, right? Is being able to provide financial support or financials for those who in different areas that typically couldn't get it. And in that case, we did create a collaboration with an MNO. And as I said, I think we were the glue between the two sides, where they're traditionally face-to-face type lending operation. So, but to be able to provide microloans, that's not a viable model. So in that case, they had to go digital, and they had to get data from the MNO. So yeah, I mean, obviously working within those confines of both of them, both of the sides regulated, setting up a solution where the data is protected from both sides and so on was key to meet those regulatory requirements. And again, I think it's a lot of time it's working together with the local with them themselves that understand the regulatory requirements, and a local partner that can make it happen. But essentially, it's fitting into the both sides of the systems and connecting to both was key to making that successful.
Thank you.
Good morning, everybody. Acknowledging all protocol and everyone in the room. Thank you, Ms. Apiwe, for moderating our discussion this morning. And thank you, gentlemen, as well, for your insights. My question is more in terms of lessons learned. Obviously, Israel is a leader. It's a startup nation. And you've driven quite a lot globally in terms of the advancements in technology. And I think it was Apiwe who mentioned a little bit earlier that from an investment and a funding point of view, you said it was 132 billion that went into fintech in particular. And we know that there have been some fintech unicorns that have risen from the African continent. However, what we've seen is that there's been a clash where technology and regulation don't meet here on the continent. So I would just like to hear from your insights in terms of what are the lessons learned in terms of how Israel has managed to strike that balance between the rise of technology and then the merge of regulation without hampering the advancement in technology. If you could just provide a little bit of insight in terms of the lessons learned and what can be applied in our context as well, particularly in fintech and the stringent regulations that currently exist on the continent.
Great question. Thank you so much. Ren, I'm tempted to say, that's quite in your space from a technology perspective. In my mind, and sorry if I'm diluting your question, what comes to mind is, regulatory aspects around where you house data centers, using cloud services, that kind of stuff. But I think there's also much broader elements than that.
Yes, so in general, I would say that one of the things that I think that the industry in Israel understand, and I'm talking about the startup industry, is that in order to be successful in every space that you operate, you have to make sure that the regulators in your side. And the way to do it is to make sure that you educate, you provide support, you explain what you're trying to achieve and how it can contribute to the domestic economy. And it's related to any market in the world. If you understand that the regulators is here to support you, both from a regulative perspective and also from a financial perspective, by providing the right budget to relevant market, it will help you to accelerate your business. So this is, I think, one of my things that can show the maturity of the local market. I'm talking about the Israeli markets in understanding the global markets and the way to influence and to support the growth of their company. I think that if you're asking about Israel specifically, I can't say, I lived previously a few years in Australia, and I have to say that I think that in Australia, the regulation is much more advanced if you're talking about the financial services and the digital transformation that they made so far. But I think that, little by little, it comes to, to a point that the government and the regulators understand that they have to support this industry. Otherwise, they won't be able, as we all expect and would like, to support the rural areas and all the people that don't have the ability to reach out to the local branch and so on. And although Israel is a small country, a tiny country, to be honest, still we would like everybody to be connected, and part of it is making sure that the regulation is in the right place to support it.
I would like to add that in Israel, where the banks are not all of them, but the leading banks are not passive, they are proactive. They are establishing those accelerators, adding fintechs. We see Leumi, that it's really even sometimes people say that he's more aggressive. So there is a kind of proactive from the banks themselves, and from of course, the telco that doing partnerships and innovation from the innovation departments, trying to integrate new technologies. So as long as you are not passive, you are pushing forward, you are innovating, it will impact all the other partners, regulators, governments. So this should be the approach. We are actively working in South America as well. We see it, especially talking about TSG or Unbanked, which is a huge community, and the government understand that, and they're looking for the right innovation and tools. So we know that there is a lot of effort that we need to invest with our partners and customers, but if we are all working together and proactive, we will reach the goals. This is the way that we approach in our activities.
Thanks, Yaron. Ran, would you like to add anything to that?
Tough to add. I think they covered most of it. I think in terms of yeah, I agree with what was said. I think that definitely being proactive. I think having a lot of discussions, more and more discussions, having even getting the community together and having those discussions between themselves and with the regulator, I think is key to moving ahead, because I think that without the support, the government support or the regulator support and so on, I think it's going to be very difficult to make any breakthroughs. But I think everyone kind of understands it, but I think it's getting everyone together and having those discussions is key to making that change. I can say I'm actually in London, so, and I know London is quite an advance in that from that perspective. There's a lot of discussion constantly happening between the financial institutions, with the regulator, and with sometimes with MNOs as well. But I think there's a lot of discussion happening to push and work with the regulator to make things, advance and not and being able to advance in terms of the offering.
Yeah, very interesting. I mean, I'm just reflecting on the question as well. And I will by no means try to put myself forward as someone who's even been to Israel, let alone like understand, intricately the market, the country, the dynamics. I just had happened to read a very interesting article about some of the reasons that makes the country so strong from a technology and innovation standpoint. And I think it's one of the lessons learned questions that you're asking, because, typically, it's a country that still sends, when you turn 18, you're enlisted in the military, and there's a lot of very advanced technology in that space that an 18-year-old gets exposed to at a very early age. I think that is a massive advantage there are disadvantages, but there are lots of nuances and a lot that I think the youth learns and is exposed to. And then aside from just the exposure to the technology, I know that the country is, you have a lot of hustlers, innovators, entrepreneurs, lots of people starting their own businesses. So I think with the willingness to experiment, the entrepreneurship, and then the access and exposure to technology, I think those have to be some of the key lessons that we should learn about, the successes and the things that make Israel so successful, having 750 fintechs that are growing, and probably more that are established every day in such a small market. But that's just my 2 cents piece, and don't quote me. I don't know if there are any other questions from the audience. We still have time for questions, so if you'd like to ask a question, please feel free.
Thank you. I was just wondering about the whole aspect of identity management.
Mm-hmm.
It talks into security as well, but some of the challenges around the digital transformation into Africa
Mm-hmm.
is that, first of all, in banking, there's these 2 trends. One is the open banking standards,
Yes.
and secondly, it's the anti-money laundering
Mm-hmm.
against terrorism. Those are the 2 trends that's really driving the need for a stronger control in identity management.
100%.
And some of the African countries don't even have what we have here from a identity number or registration perspective.
Yeah.
I'm just wondering, from a technology perspective, how are you approaching that?
Thanks for that question. Any takers?
I'll try then. Yeah, I mean, I think that it's again, it's you're right. It's definitely a big issue. I mean, we're not addressing it ourselves per se, but I think that the situations we've been involved in is where obviously if the financial institution is the one leading it, right, leading the lending, then they will make sure of take care of the identity management. But then obviously if we're collaborating with an MNO, we need to match the bank identity to the mobile identity, and that's where we can come in and kind of match those 2 together. But yeah, definitely it's an issue that's it's a high up issue that needs to be taken care of, and there's a lot of different solutions in the market around that to ensure that can happen. Lots of new technologies around there that can increase security, reduce fraud, and so on in that area. I don't know if anyone else has anything to add on that.
Yeah, it should be part of the partnership approach with security or other companies that doing very advanced KYC or executing other tools. For some customers that requested anti-fraud or anti-laundering, so we are working together with them. So it's something that we see in other markets as well. So this is a challenge, but it's something that we are practicing and operating it.
Thank you. Any other questions?
It's actually not a question, but perhaps a curiosity. How do you handle instances, and if you have had, where you are operating in a regulated jurisdiction, so maybe Israel is, or the UK, and your clients are based in relatively unregulated areas? How then do you comply locally, especially now when we come to GDPR and PAPIA and everything else, where there's obviously going to be transfer of information between the two entities in the different jurisdictions? How do you manage that?
I can answer.
Go for it.
Okay, from our experience, we are fitting our solution to the local regulation. We are not passing any data to outside of the country, of the region that we are working. So, and we ourselves, we are practicing or working in a zero knowledge approach. It's a kind of a technical, but we ourselves, we don't know who is the customer. So our way of delivering deployments, it's locally within the private cloud or infrastructure of our customers. So we are kind of under the umbrella of the customer itself. Even with from the security approach, not only the regulatory or any other challenges that we are facing. So this is the way that we operate that, and no data goes out of the customer system. So, and it works for us.
Okay.
The same apply for us, exactly the same. And also for Ron.
Yeah. So you do find some regions where, from a regulatory perspective, they're not allowed to use cloud services. Yeah.
Yes.
Data stays within, for example, Rwanda, etc. How then
Yes,
do
of
you
course.
extend your services to customers in those regions?
So it goes, typically it goes by the region. We operate it, I can give a sample in China. So there are different sub-regions that need to be handled, and we deploy for each region and operate it as a single entity or isolated entity. And in some cases that we can share the data between those entities, we are building a hub, a central hub on top of that. But we are working by the regulation. We cannot break any or try to do a kind of non-regulated act. So this is the way that we are operating.
Yeah, that's fair. Thanks so much. I don't know if anyone else has any further questions.
Just to address with relation to the cloud and public cloud, and maybe the message coming across that it is an on-premise type of deployments. From a regulation perspective, they have these capabilities, and yes, there is move quite a bit heavy drive for private cloud providers to be in country from a regulation perspective. And these can be addressed, I guess, as a separate discussion rather than the deployment around the technology that can add the values within the regulation and the network operators and the financial businesses.
Thank you. Thanks so much for that. I think if there are no further questions, if there is one, I'll take one more. Going, we have a comment? Go for it.
Question.
Sure.
With regard to the technology that they're offering to the financials, banks, and MNOs, is mainly the analytic and being able to know the customers' behaviors to be able to identify the potential and the risk involved in a micro lending instance, or what's the end objective of the MN or the FN or the financials around reaching the rural side of things to be able to capture these customers there?
I think that's a great question for you to each give your own perspective, especially answering, the different capabilities that you are bringing, to the country. Maybe Yaron, would you like to start first?
Sure. Our offering is a wide one. It really depends on the use cases and how the customers see our integration within his platform. But out of the box, we are offering, of course, the credit scoring for credit card or micro lending, and from the perspective of user engagement, we are able to give insights or recommendation how to communicate with the customer. It's all based on behavioral data and behavioral approach and communication between the customer and the financial institute. And we are doing it not only for the financial institute, we are doing it for other vertical as well. So understanding the customer based on psychology and AI give us the ability to really give a range of insights and answers on our customer questions. So this is the approach, and for each customer there is a kind of fine-tuning, new use cases that rise up because a financial institute in let's say China or Brazil is not operating the same for his own customers. So there are those custom use cases that we are practicing as well.
Yaron, if I can just ask a quick follow-up on that before the other panel members answer. In South Africa, you have a very diverse country. You have a lot of different languages, different people from different backgrounds, and you're speaking of China and South America. So are you able to do this in any country in Africa, despite, the language and all of that?
Yeah, as we say, people are people everywhere, and we are, in a way, we are alike. We are not dependent on the language. We are looking at behavioral data. Part of that is, of course, can be text or communication, but we are not dependent only on that. The way that we integrate and deploy our solution, we are kind of training the AI models within the same geolocation, and then we are operating that in production. So we need to do a kind of fine-tuning to our AI models to reach the best accuracy. That's why in different regions or sub-regions, we build a specific entity to support that, because we know that there are differences.
Wonderful, thank you. Ran.
Yeah, so I think similarly to what Yaron mentioned, we're a credit analytics decisioning solution. So ultimately, and we specialize in microfinancing in terms of being able to get data, analyze the data using, again, machine learning, AI, and constantly improve that data to ultimately build a credit score and understand the credit risk profile of the borrower, and help basically make an instant decision based on that. So getting all the information, making a credit offer recommendation, and then enabling that to instantly make that decision and give that back to the customer, as well as I think with doing more and more around personalization. So being able to not only say yes or no, but what is the best credit product for that customer that meets exactly their requirements. It could be adjusting the amount, it could be adjusting the timing of it to reduce the risk and increase the ability to return that. So ultimately, it's yes, being able to provide that technology to make those decisions instantly based on data. And as I mentioned, one a big issue is that collaboration between banks and telcos, so being able to get data from both sides, analyze that data, and produce a score. Ultimately, it's a lot of it's going to be the score is going to be personalized to that institution based on their customer base, their profile, and what are the products they want to lend. So it's all about creating that tailored solution for each and every customer, and being able to provide those loans or decisions instantly.
Thank you. Thanks so much. Ken?
Yeah, so NetOp is not dealing with the end user in like in the other cases that was mentioned here. NetOp is we're ending in the branch level. So from our perspective, we don't actually try to analyze the customer behavior and so on, but we try to actually analyze the network behavior and then to give it a health score, and by that, predicting and proactively fixing any issues that arose. And I think that that in the end of the day, once you are able to streamline the connection and making sure it's in a high quality, the end user is also going to benefit from it.
100%. Thanks so much. Once again, thanks to the panel for taking on the questions. One more.
Yeah, my
Last one.
apologies.
We'll
My
slip it in.
apologies
No
about
worries.
that. Yeah, like coming in at the end.
No problem.
Yeah. So my name is Zosulu Maisela. I'm the founder of a company called Uka Connection, which is a Wi-Fi enabler, Wi-Fi infrastructure, insights and branding company. I see Wi-Fi as an enabler. So for me, being in this room here, I'm thinking about how do I enable the people that I put Wi-Fi into their spaces. So I'm busy with a proof of concept, installing Wi-Fi into public buses in Pretoria that have a captive audience. But so once you have that captive audience, what do you do with that Wi-Fi? You need to enable people to be able to make transactions, transactional capabilities, being able to purchase, being able to buy in advance and pay later, being able to know their credit score, being able to give them a lot of these things. And I think probably that's, and I'm dependent. So I'm dependent on the networks to get a stable network, which is GSM in that case, because it's a bus. And then I'm also dependent on the marketing company that provides me with the software. So I think what I would like is the opportunity to be able to have the gentleman's email addresses or contact details, to be able to engage with them, to be able to look for other companies of similar in Israel that are in a similar space, because once I kick off the particular offering that I have, it's about trust. You spoke about trust up here. You know how people are fickle. If they walk into your bus and there's no Wi-Fi that day, why must they go and use your payment system that you've enabled in that particular bus? So we deal with a lot of trust. So so I haven't slept in the past 48 hours because the buses, as they're running the POC, there's been issues. But exactly why we're doing a proof of concept, But yeah, I just wanted to just put that across and say I'd really, really like to get in touch with this gentleman because I do see that opportunity to grow within the space of what I'm trying to do. Thank you.
Thanks so much. I mean, that's precisely the purpose of today. So thanks so much for sharing that. Very interesting projects you're working on. And definitely we will help you get in touch. And again, really the objective that we want today is to drive this collaboration, these partnerships to bring the technology to our country and to the rest of the continent. So thanks for sharing that. Okay, I'm going to then say thank you to the audience for participating in the questions. Thank you so much to the panel. I think it was very insightful, your responses, your inputs. Really appreciate your time with us this morning. I'm going to hand over back to you.
Thank you, Apiwe and the panel for a very insightful panel discussion. So regarding your question, to connect to the companies. So the companies that have scheduled B2B sessions with the respective companies, I will do the introductions to you guys.